Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast. And I am your host, Beau Eckstein. And today we're going to talk about what is a blanket loan and how to use it. Okay, so let's get started. Let's say you're building a portfolio of single-family properties and you're just going out and getting conventional financing, right? Because usually with conventional financing, you can get 30-year fixed rates in the low threes or 4%, somewhere in between there on non-owner occupied property, which is great. But what happens is that all of a sudden you start getting a lot of these, and maybe after a while, the banks are starting to say, well, you're not debt ratioing now because they use 75% of gross rents as their qualifying income, right? So if you have enough of these properties, then maybe your W-2 income doesn't qualify you there after a while. So, how can you overcome this? What are some strategies on financing single family properties once you start growing your portfolio? So there's a lot of options, and I'm going to walk you through a couple of them.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So as you're building these loans in your name, you're going to run into some debt ratio issues potentially. And also, after you get 10, it becomes very difficult to finance properties in your name. So one strategy is you can do what's called a blanket loan. So you can take those 10 properties or those 8 properties, and you can finance all of those properties under one loan. So you get one loan, and the great thing about that is you can move those from your personal name into an LLC. Obviously, talk to your tax people, make sure you're doing things so you know the tax consequences, if there's any, or if there's advantages. But now you do one loan on those 8 or 10 properties for maybe $2 million, or whatever that number is. Now they're off of your personal credit report. So you can go back and now, because they're now owned in a business entity, so now you can go back and do the same strategy again. So there's lots of ways to do these. You can also take down packages. So let's just say a landlord wants to sell 10 houses at once to somebody and give them a good deal. You can actually go ahead and get one portfolio loan to buy those properties as well. So you can utilize these blanket loans or portfolio loans to finance multiple properties, right? Eventually, there's people out there with 100, 200 properties inside of these companies, and so they're not in their personal names. But when you're getting started, it's a lot easier to finance them. Usually, going to a Bank of America type lender or your local mortgage broker, because you can get really good terms. And so I suggest, if you're doing it that way, once you get enough of them, start looking at a blanket loan as an option to finance them and get them out of your name. The other options you have out there are, like I said, you can take down a portfolio of properties with a blanket loan. And we really look on blanket loans. We're looking at your credit score, but really what they look at is they look at the debt service coverage ratio. So once you get 10 of these properties, it's a commercial loan now, and they're looking at what income is coming in and what's the debt payment on that. And you got to be at a 1.25 or greater debt service coverage ratio. And typically you can do 70 to 75% cash out on these blanket loans. So a blanket loan is a very, very good tool. and you should start thinking about that as you're growing your portfolio. How you can get more financing, leverage a little bit better, grow your portfolio, and then also have the capabilities of still buying properties in your name, because now you're packaging these up and putting them into an entity, and then they're out of your personal credit report, out of your name. And so it's a huge advantage as you're growing your portfolio. Hope you enjoyed this quick episode. Please subscribe and share this with your colleagues. I look forward to seeing you on the next episode.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.